Hi guys, thanks for clicking on this video. Today we are looking at Walmart, ticker symbol WMT. I'm going to be looking at the fundamentals of the stock and then giving my fair value based on discounted free cash flow and the Buffett-Graham intrinsic value. Then at the end of the video, we're going to be looking at some of the technicals of Walmart to see if it's a buy also in there. So let's first have a look at the stock price. It's $147 a share, and you can see we have earnings coming up on the 16th of November. So if we just quickly head over to tip ranks, you can see that the earnings per share forecast is around about $1.4 a share. Or earnings per share, and you can see that the analyst consensus currently is a strong buy. If we look at the earnings compared in 2021, you can see that Walmart has beat earnings in Q1 and Q2, so expecting a similar thing on Q3. In fact, if we look at 2020 and 2019's Q3, they've also beat earnings there. They seem to consistently not beat earnings in Q4 though, so that is interesting. So let's have a look at the steps, and then we'll head into my valuation. But first, can you please give a like on the video? As always, it really helps me out and helps me get this video to as many people as possible and keep making these videos. So Walmart has a market cap of $412 billion. It has a share price, as I said, of $147 a share, 52-week low of 126 and a 52-week high of 153. It pays a pretty nice 1.5% dividend, and the ex-dividend date is the 9th of December. So buy before then if you want your dividend payments. So first is the P ratio less than market, and that is a very high PE ratio, 41 to 28.5, so that is a fail. Very interesting there. But is the revenue increasing? Yes, it is. 514 billion to 566. That is absolutely crazy amounts of revenue. I think Walmart is the largest revenue generating company in the world, and the revenue is increasing, which is very good to see. Now, what are they doing with that revenue? Are they increasing the profit? Yes, they are. 6.6 billion to 10 billion. So on the face of it, you would say that's excellent news. But if we just quickly go to Yahoo Finance here, you can see that the net income has actually decreased in 2020 and 2021. 6 billion to 15 billion to 13 billion, and is actually decreasing there. So that is still a positive from 2019, but I just want to draw attention to the fact that net income has decreased over the last couple of years. Next, are they buying back their shares? Yes, they are. Just under 3 billion to 2.8. So that is another pass. And finally, is the free cash flow increasing? Yes, it is, but barely. 17.4 to 17.8 billion. And if we just quickly go to the free cash flow here, you can see it was 18 billion in 2018, 17 billion, which is the number we're comparing it to, and then it increased massively to 25 billion and has decreased then. So you really want to see why in 2021 or the start of 2021 and 2020 that number was so high and now it's decreasing. That is the same with net income as well. So yes, it's increasing, but we can see a bit of decrease in those numbers. So a free cash flow ratio of around about 23.11. So that is close to what we'd be expecting to see, and that is a good number. Very out of difference with the PE ratio. I think net income, and as we said, the profit is down, but the free cash flow is relatively more up. Is the dividend safe? It's a 6 billion dividend, and they've got about 18 billion in free cash flow. So yes, it is. Right, now we want to look at the discounted free cash flow model and the Buffett-Graham intrinsic value. So I've calculated the future free cash flows, and this is based on averages of these numbers. So let's have a look at what that is. And it has a calculated stock price of actually $210 a share, which is currently at a 42% discount. Next, we want to look at the Buffett-Graham intrinsic value, and this looks at share price, earnings per share, expected growth. And what this says is actually it is pretty overvalued. It has a fair price of $87 a share and a Graham price of $65. Now, this is probably due to the relatively low expected growth rate and the earnings per share. It's going to be very hard for a company like Walmart to grow very rapidly over the next 5 years, which is why the Buffett-Graham intrinsic value doesn't really like this stock. But the discounted free cash flow does, saying it should be worth around $200 a share. Finally, we want to look at some of the technicals here. So what I'm going to do is I've got some moving averages here, the 50-day in green, the 100-day in yellow, and the 200-day in red. And what are we seeing here? Well, you can see that the price has broken through the 3 major moving averages, which is obviously a very bullish signal. The price doesn't often... you can see it's really playing on both sides here. It has dropped below the 200-day which was the negative moves here, and it dropped again here, but then it hasn't, it really does rebound quite strongly. So it is above all of the major moving averages, which is a strong buy signal. And then finally, the next one thing I like to look at is the MACD. So let me just get the MACD indicator up here. And what we want to look for here is the bullish and bearish signals that we can see. So currently you can see that the MACD lines have just crossed. This, it would be a sell signal as the MACD line has crossed below the signal line, and you can see here easily that the histogram is red, which is just basically the same line. But overall, it's still pretty bullish because we have both of the lines above the zero line as well. So what you could do here is wait for the stock, wait for the price to drop down, wait for this negative red line to continue, and then on the upside you would buy it basically when you see the MACD line above the signal line, which it was here on the 12th of October, or wait for the lines to cross the zero line here, which it did on the 25th. So that was a bullish signal, and that was a bullish signal, and you would have continued. So let's just see if you followed it along here. You would have bought at around this point here. And then you would have seen another bullish signal, which would have been around about here, and you would have continued, and then you would have sold at this point here. So that would have been a good trading opportunity there. So yeah, MACD, I do like looking at it. I think it's a very good indicator. Next, we want to look at the RSI. So let me just get that up, and that's the Relative Strength Index. And this says whether the stock's in overbought or oversold regions. So currently it was in the overbought region, which when Walmart gets in there, we normally see quite a large sell-off. We once again saw that in August. And then when it was at here in the oversold region, we saw a massive boom there. So it's currently trending back towards zero. If we get the stock, see consistently here this entire year, if it's ever hit the oversold regions, then they have been excellent buying opportunities. So if Walmart ever gets to this level again, I would say buy. Probably on the RSI, I would say hold off right now. Wait for the to go into this region and then buy if it ever gets there. If we take the stock out a little bit further, you can see once again, this was in the oversold region, buy. This was in the oversold region. That was during the pandemic, I'm guessing. Or during the stock market drop. So that would have been an oversold region. So yeah, I would say if it ever gets in the oversold region, definitely a buy. Right, so that is my summary on Walmart. Discounted free cash flow loves the stock, and the above major moving averages and the MACD and RSI do seem to say it is in definitely some bullish moves at the minute, but maybe hold off and wait and see. As I said again, earnings is on the 16th of November, which is the Tuesday before the bell. So look forward to seeing what's there, and I might redo this video depending on the interest on stock and depending what comes out of earnings. Right guys, thanks for watching. Please give a like on the video if you enjoyed it, and I'll catch you guys next time.